Good afternoon, everyone, again. I'm going to talk through now our ongoing journey to optimise our pricing through the installation of a more dynamic and automated approach to pricing. I think it's fair to say that we're in the early stages of that journey, but to date, the changes we have already made have supported our drive towards 80% occupancy and helped us deliver sustainable revpar growth. Today, I'm going to provide more of an overview of the changes we've made and some of our plans moving forwards. Dynamic pricing has been a lever for growth as we've introduced more sophistication into how we set price. 5 years ago, we had a very simple approach to pricing. We priced all hotels using the same yield curve and varied our pricing according to just two factors, week part and daily demand, which itself was reflected by just 13 rate levels. Today, we have significantly evolved our approach. We now have two separate price points, Flex and Saver, each of which carry different benefits targeted at specific consumer segments. We have separate yield curves for 7 different hotel bands and for each day of the week to reflect different patterns of demand. And we also have significantly more rate levels to enable greater customisation of pricing to hotels. We completed our movement to 2 price points in the last 12 months with our rollout of our Premier Saver rate. In trials, this drove around 2% uplift in revpar performance and made more transparent the benefits of our offer to customers. And it worked broadly via 3 mechanics. Firstly, it enabled greater rate investment through the Saver product and drove overall volumes, in particular from early booking price-sensitive leisure shoppers. Secondly, we charged a premium for flexibility whilst maintaining our overall volumes, and we more effectively monetised cancellations. The deployment of dynamic pricing has helped us drive revpar growth and support that drive to 80% occupancy. We've done this by driving volume in our lower occupancy sites through targeted rate investment. As you can see on this chart, in the last 12 months, we've reduced the number of hotels operating at occupancy levels below 70% from 116 hotels to 88 hotels. At the same time, we now have 230 hotels operating at over 80% occupancy versus only 180 hotels for the prior year. The net effect of this is we've driven our occupancy and our revpar over the last 12 months whilst holding our rate. And on this slide, I'm going to illustrate the kind of macro benefit I just described with reference to our performance on a specific week. Now, apologies for the detail on the chart, but dynamic pricing is about the detailed application of data. What this chart shows, it shows our trading performance by lead time for a specific week in a low demand period of trading. As you can see on the far left of this chart, on booked position 1, this shows our position 13 weeks before the stay week. Okay? As you can see, our performance was behind the curve, albeit off a low booked volume of just 6.1% occupancy. We were 0.6 percentage points down at this point versus the previous year, implying a volume decline of around 9%. This was despite rate investment of 5%. As a result, at an absolute revenue level, we were £144,000 behind our performance from the prior year at the same booked position. This drove 2 effects. Firstly, our dynamic pricing model reflected the softness in demand by lowering the rate. Secondly, the visibility of our trading led to us launching a bigger sale than we had previously planned. By week 6, as you can see in booked position 2, the twin effect of these actions had led to a turnaround of our performance. On the back of that rate investment, we had driven strong volume growth and started to build a positive revenue position of £195,000, as you can see illustrated in the centre of the chart. On the back of this performance, we were then able to raise our pricing through to the stay date. This then improved our year-on-year revenue position, leading to a good trading performance of around 3% like-for-like accommodation growth. Note, this was achieved by driving strong volume growth on the back of around 2.5% of rate investment over the course of the total booking cycle. Moving forwards, we are following a simple 4-stage process to identify ongoing opportunities for improvement within pricing. Put very simply, we use our management information, and that is a mix of reservations data, online data, as Mark just described, and customer data, to identify commercial insights and pricing opportunities. Based on those insights, we then rapidly test these in a controlled set of hotels, review the performance of these trials, and dependent on the results, embed this learning into our pricing model to optimise our performance. Moving forwards, we see multiple opportunities for RevPAR growth. On this chart, we've described at a high level some of the pricing opportunities for Premier Inn, although these are by no means exhaustive. To reference a couple of these specifically, as described in Arrow 2, we are starting to move away from pricing by 7 hotel categories to pricing by site to better customise the price to local market conditions. Separately, as described in Arrow 4, we're also building more automation into our pricing so that our price starts to respond in more real time to variations in our rate of sale, in particular at short lead, where we generate over 30% of our bookings. In tandem, we believe this suite of initiatives will continue to maintain our competitiveness and drive year-on-year RevPAR growth. Finally, underpinning all of these specific initiatives, we'll extract additional value by ensuring dynamic pricing and digital work together. By linking our web data with our customer data and our bookings performance, and ensuring we remain joined up with our teams at site level, we will become ever more precise in terms of how we set price and target our online marketing across each of our 500 local markets. This will enable us to efficiently win market share, drive RevPAR, and enhance our overall returns. I'm now going to hand over to John Forrest, our Chief Operating Officer, who will talk about how we set up and manage our operations at site level.